Okay, so hi everybody. Thank you for attending the second roundtable organized by TICE Reconnect. We hope that it will be as successful as the first one. Of course, special thanks to all three guest speakers who accepted to join us today to share their insights and expertise. It's really a pleasure to have them all from across the globe joining us today. I will start introducing everyone into more details to have their career highlights. Then we will move to the question. Feel free, I invite the audience to ask questions during the talk. You don't need to wait until the end of the talk. So if there is any follow-up question you want to ask related to a specific topic that we'll cover or beyond those topics, feel free to ask. Either you can use the chat or you can use as well the virtual hand. So we'll try to make sure we answer as much question as possible within the time constraint. So our guests are Firas Hashtayeb, who is co-global head of quantitative trading, strategy and research at InstiNet UK, Mohammed Batayeb, founder and CEO of Capone Consulting in New Jersey, USA, and Dr. Nizar Hula, senior director, AI strategy and solution development, National Bank of Canada, Montreal, Canada. So I will start with the first guest speaker very quickly, Firas Hashtayeb, who started his career in Lehman Brothers in Japan in 2006. Then he moved to Nomura Securities in 2008, and he worked there for a couple of years. He is expert in trading, statistical arbitrage, algo trading, AI, NLP, and other data science modeling. And he's currently a managing director, co-heading the digital strategy for global markets and co-global head of quantitative trading strategies and research at InstiNet UK. Mohammed Batayeb, he has expertise also in various areas: trading, portfolio, risk management, derivatives, capital markets. He is the founder and CEO of Capone Consulting, and he's providing consultancy to various global financial institutions. And he was holding, or maybe he has also key roles now in some companies, in various companies actually, Credit Suisse, Nomura, ABN, JPM, KPMG, NBC. And he is teaching financial statistics and risk management at Rutgers University. Dr. Nizar Hula has valuable experience at Yellow Page Canada, where he served as development manager for data and taxonomy. And he delivered their solution related, for example, to digital marketing, product placement, lead generation, geolocation. And currently he's working for National Bank of Canada for a couple of years now, where he is the Senior Director of AI Strategy and Solution, focusing on innovation and efficiency in the retail banking field. He has also expertise in various areas, such as software development, data science, knowledge management, knowledge engineering. So that's about our guests, so that you have a better idea of their expertise. And these are the big categories that we'll cover today: FinTech and banking applications, emerging tech, use cases in financial industry, advances in trading and retail banking, role of robo and AI advisor and digital personalization compared to human service. And finally, we will close with pros and cons of emerging techs in the financial industry. So I will stop sharing at this point, and I will start asking my first question related to the first topic, which is the FinTech and banking application. And my question will be oriented to all my guests. So can you please give us a general overview at the beginning about the different use cases of emerging techs? And when we talk about emerging techs, it could be AI, cloud service, digitalization, robotics, blockchain, IoT. So can you please give us some use cases in the financial industry, depending on your area of expertise? I don't know who wants to start.
Yeah, I mean, I will start.
We start with Firas, okay?
Yeah. Okay, but good evening, good morning, good afternoon, everyone. So yeah, my name is Firas, as was introduced. So in my world, we use AI mostly, for prediction. So I actually manage algorithmic trading systems and strategies. For those who do not know what that is, it's actually software that's programmed to take trading decisions. You know, something that usually like a trader will be doing, but for markets like, you know, in the US or in Europe or in Asia, the speed of the market is such as it's very difficult to trade efficiently, you know, just by kind of a mouse and someone watching the market. So we program these engines, and one of the key aspect is basically, you know, kind of trying to have the best outcome of the trade. And for that, we need to have a view on where the market is going to be going. Do we think the market is going to go up? Do we think the market is going to go down? Do we think it's going to stay at the same level? And for this, we need prediction. So historically, I mean, we can always use kind of linear kind of approaches for prediction. The thing is that the phenomena that we try to capture in the market are so complex that we felt that linear approach is not enough, and we use you know, what's called machine learning in particular, which is, I would say, like a non-linear type prediction to try to forecast the stock return in kind of various time horizons. So just maybe you know, saying it simply, we try to predict what will be the movement of a financial asset in, say, for example, 5 minutes or 2 minutes or 3 minutes, and then we take a decision, a function of that forecast. So this is really the major use case I have in my business. We use other areas such as NLP, so natural language processing, to program bots just to help actually our colleagues in other areas, just, you know, so they can ask the bot to you know, to automate a task or to get some information. And that's it from me. I hand it over to maybe Nizar or to Mohammed as well.
Yeah, I can add on top of that. For your question, Noel, is I'm gonna just stay high level, meaning that in terms of emerging tech that is used in finance, we see mostly, I can talk about cryptocurrency in order to accelerate the digital payments or contracts or remittances, and make sure that we also accelerate the procedures for checking about anti-money laundering and network of payments. There is the AI-powered chatbots, so meaning that there is virtual assistants offering services for from frequently asked questions or question answering to personalized advice to customers. There is also the emerging, it's not really an emerging technology, which is the robot process automation. It's actually quite old, but it's getting a new wave of innovation through advances in AI and machine learning that actually makes sure to automate repetitive tasks and improve efficiency and reduce costs. There is also machine learning for credit scoring and loan origination. There is the Internet of Things for banking, where you can actually add devices in branches and ATMs in order to detect or collect data about user behavior. Cloud-based services, of course, it's emerging because we're leveraging the cloud computing and the scalability to make sure that we're gonna use more advanced ML techniques for detecting or predicting or doing predictive analysis, prescriptive analysis, or personalization. There is also the digital identity verification that is one of the emerging techs. And also, last but not least, the quantum computing, but I'm not expert in that. Just like that, it's used especially for you know, when we have lots of calculations that could take years of time, they could be done in a few minutes or a few seconds, and Google is actually quite advanced in that.
Okay.
Thanks.
Thank you, Mohammed.
Yeah, thank you. Well said, Firas and Nizar. So I don't want to repeat the same things Firas and Nizar said. So everything they said applies to my word. I want to just stress the fact that need of efficiency and speed. So AI and new technologies is growing basically, and it's the evolution of IT, and typically military and the financial market always are in forefront of any innovation. Why? Because they have the money. Military have the money, and finance have the money. So for example, I remember 25 years ago, we are using stuff like now the mainstream is using, but we are using the chat, we are using the things in almost like this. Now we have this social media mainstream, but we are using it for trading. So now what we see is the use of AI, but more of a buzzword. So I want to define AI for the conversation and for everybody. So when we say AI, we're not talking about statistic kind of modeling. We're not talking about quant modeling. Also, we're not talking about a plain automation, because that's would be good to kind of make sure we don't call that AI. Just call AI and machine learning and anything around artificial intelligence that is not automation and simple code for this forum. The second thing that I see that it's impacting, and it's very expensive to kind of deal with, and we need to have a good knowledge, is the tool, which is mainly the server and the cloud computing and the clouds, like this, where the servers are sitting. Basically, do you want to make a decision? Do you want to have your server sitting next to you, or do you want to have a cloud kind of base infrastructure? And big places will have a hybrid of both, right? You cannot do AI without very sophisticated infrastructure. And we will talk about the pros and cons, and we'll touch on that. So these are the couple of points I wanted to kind of add to what Firas and Nizar said, but 100%, I mean, I echo what they said.
Okay, good. I see already a question on the chat. So to make it interactive, let's, if anyone could answer this question, especially Firas or Mohammed, because it's more about algo trading. The question comes, can I read the name? I cannot see a cookie. So what type of algo can give you an accurate prediction in a very short time?
Okay, I will take this one. Okay, there is no free lunch, means that it's always a trade-off between precision and time. So if you want something that's very quick, means that you need to sacrifice precision. Because think of it actually this way: the more, suppose you have actually, I mean, I'm not going to give like name of specific algos because there are just dozens, probably thousands of them. But think of it actually this way: the bigger your network, so the more precision you can achieve. But with that precision, you're going to have to spend more time, doing the calculation. So there is no good answer. There's just, what is it that you want to do? Is it precision or is it time? You can optimize it, but you can never have both at the same time, unless you have like a supercomputer or some unbelievable kind of strong actually machine that can give you both speed and precision. Yeah.
Okay, thank you. Mohammed, do you want to add something or?
Yeah, a different angle on this. I know Firas is focusing on AI, and I want to say something about trading and algo in general. So it's a very short time. Do you mean like you want to trade in and out very quick, or you want something very quick that you can start trading with? So if that's the case, it's what Firas said. It's like there is no free lunch. It's like you got to work hard. It took me 15 years to put an algo together that makes sense of research and stuff. Again, I have a small company. I don't have like a large company, but still, even if a large company, you need to put the hours and the time to kind of do it. So going back to trading, there is different style you can make money. And even though my style is very different from Warren Buffett is a long-term kind of style, which I will make the link to AI especially. AI will have hard time trading like Warren Buffett. Okay, because the more you have a longer time frame, the more you need more input, and to Firas' point, the more is gonna be like exponentially hard time computing and also get the right data, because garbage in, garbage out. So if you wanna build a bot that trades like Warren Buffett, we're not there. We need quantum computing. We need a lot of points. Now, if you want a bot that trade like me, I'm not a high frequency trader. I don't like arbitrage. I'm kind of purist when it comes to trading. I want a short-term direction. I'm a short-term direction trader, and always been. And then when I built the algo, I said, let me build something that trades for me. So I'll be doing other things, like Noel said earlier. I'm a consultant most of my day, but I like the idea that I have a machine working 24 hours. Multiple machines, where one for simulation, one for like doing different things. So the idea here is this: the shorter the time frame, the easier AI can take over your job, basically, right? So especially high frequency trading, because it's rule based and it's arbitrage. Is one of the easiest and one of the easiest. I mean, one of the application use case, and that's what Firas, I think, is an expert in, and also swing trading, I think, short term. And I'll let you, Firas, talk about the time frame you keep positioning. But the idea here is, if you are talking about short term trading in and out within, let's say, minutes or even a day or two, yes, AI and algo trading, rule based, great. Now, if you're talking about keeping position for like 6 months, a year, 2 years, algo trade and AI, I think people will still can beat algo trading and AI, because there's so many parameters that you need to put in to mimic what a good trader will do. So now what the computers will give you is the speed of, instead of doing 3-4 markets, doing 20-30 markets. Yeah. So different style. I can give you my algo, but you will have a hard time trading with it, because in the end there is discipline and position sizing you need to add. So there is no real answer to this, depending on your style. Now, if you want to build something very quick, if you're talking AI, you can use like something like neural network or random forest, and please, supervised, basically machine learning. We don't want to go into too much details, we don't have time, but these are the names. You can Google it or chat GPT it, and you can have good information on how you can build a quick algo and you can start trading with. Now, are you going to make money? I'm not sure. Maybe you can get lucky and make money. I mean, it's a hard job, so there is no easy answer in here.
Thank you. We have Nizar who wants to add something.
Yeah, I just wanted to add, like, because the question is broad and it does not define exactly, are we talking about prediction of prices or other things, but there are like usages that you can make from algorithms like sentiment analysis, where you can find really lots of models that are already pre-trained that you can fine tune in order to make them like converge quickly into an accurate processing of information, meaning that it will take news articles, social media event, feeds, etc., and then it will give you, for example, an indicator that can be correlated with a price movement. So then, of course, like those kind of algorithms are quite quick and easy to fine tune. So in that direction of the question, of course, it's not. I'm not talking here about fine tuning a model to predict the price short term.
Okay, thank you. We move to our next question in the same category, fintech and banking application. And if you were to hire someone at this point. What are the key skills that are required for a financial professional, depending on your area of expertise, and knowing all the kind of emerging techs that exist now in the market? What kind of really key skills that they need to have, okay, to see that they are really ready to adapt to those emerging techs? Who wants to start?
I'll start again. So I would say that, given like if I talk about myself, I graduated in 2006. It's 17 years ago. Definitely, I didn't study AI at the time. I studied, financial math. I studied probability and statistics and a bit of like stochastic calculation. And I did like computer science as a hobby, right? So reality is, even if you have the perfect profile today, in 3 years, 5 years, your profile will be, might be, I would say outdated, or, or you might like require something else. So the answer to this question is, I would say more your ability to learn new skills more than actually what you studied in, at university. So obviously, if you are in the AI field, you need to program. So you need some basic level of, kind of programming. Could be Python, likely these days, kind of high level programming like Java or C++, or, if you want to go to like, assembly and others, then you need to have some foundation in math, because you still need to read numbers. So you have a lot of numbers in front of you. You need to make some sense of them. And if you don't like numbers, well, this domain is definitely not for you. So some affinity to mathematics, it could be like algebra, it could be analysis, whatever. I mean, I really think it doesn't really matter that much. So understanding of statistics, so that when you look at data, you don't, make the mistakes about trying to make the data say what's not supposed to say, or calculate an average on some data that, cannot have an average, and so on. So we need some basic of statistics. And I think that's it. Of course, I like people who have like a physics sense. Because when you write a model, usually models is not just coming from data, it comes from like phenomena. The prices are mean reverting, or they have some momentum or whatever, but it's coming actually from physics. So having this like physics sense, I actually value it a lot myself. But again, the most important skill from my perspective is the skill to learn new skills. That's really, the one, if you have to remember from actually today, it's yourself being able to learn something new quickly, because you need to adapt, and we don't know what's going to happen in 5 years. We don't know what are the next kind of technologies, or what's going to happen. So you need to be flexible, and you need to be able to learn. That would be my answer to this question. Thank you.
Okay, next, Nizar or Mohammed. Nizar, go ahead.
I can add on that. Actually, I agree with Firas. The main important thing is actually the skill to learn new skill. The ability to learn is the most important thing. And actually, based on my experience and what I've seen in the software engineering, as a software engineer, or as a full stack developer, or as a team manager, it's the flexibility and the ability to learn. Of course, that entails the fact that knowing that we have that soft skill, now I can talk about the hard skills that are important to know or to tackle in order to succeed in this area. Meaning that there is a need for data analytics skills, meaning data visualization, decision-making, analysis, knowing how to talk to data and how to understand data. The second thing, which entails knowing statistics and math, etc., is the proficiency in machine learning and AI. So that entails like a set of other skills in order to master machine learning and AI. Knowing how to use the cloud, because actually building an algorithm that is really good, that has really good prediction and precision, etc., but it runs in ages and it does not give the answer at the right time, or it would cost tens of thousands of dollars because it's not optimized correctly, or it actually the hyperparameter phase would take ages and lots of computation. So knowing cloud and the optimization part, meaning how to optimize your algorithms and algorithmic complexity, cybersecurity, regulatory compliance, coding and programming are things that are actually, when you have those skills, you can master, meaning that, of course, knowing that your algorithm should not leak sensitive data. You need to know how to defend your tool or your model against or with regards to a QA in regulatory and compliance, to make sure that you're not discriminating or you're not using data that is not that's actually giving the model a peak, and you're actually biasing all the model, and everything is perfect on paper, but when we put it in production, everything goes down and we are bankrupt. So all those skills are important, but the major skill is really the ability or the flexibility to have a business acumen and learn quickly about the business and ask the right questions. So,
yeah. Good. Mohammed?
Excellent answer, but I don't want to repeat what they said. I'm going to give you a different angle about this. So I'm a big believer that there is a difference between movement and progress. But let me repeat that. So you go to, I don't want to name the countries, right? You go to a third world country, right? Their streets are very busy. Nobody's doing anything. They're just going in the same direction, going back and forth. You go to, especially Europe, the West Europe, one of these countries, or one of these countries where like very advanced country. You feel the streets quiet, feel people are focused and work. So same thing for acquiring the skills. First is what you want to do. So you got technical skills. If you want to trade, beside the technical skills that it's very hard to kind of, fine tune, is the subject matter expertise, and it's not just the number. So about trading, it's unbelievably emotional, meaning you cannot be a good trader if you let greed and fear control you. And as you grow in your career, the moving target is going to change. So basically you lose, let's say 20 years ago, if I lose this amount of money, or my client lose this amount of money because of my algo, I don't sleep or I get upset. Now I don't want to say I don't care, but it's just another trade. Winning or losing. So that's one. The other thing, what you need to require is discipline. Meaning you cannot do the job and compete with guys like Nizar and Firas if you have no discipline and you have no grit and no like I wanna be good in what I do and consistent and true to myself. So algo trading is just another way to trade, right? So if you ask me what you want to learn, if you do an algo trading with AI or with manually, one, you need to know the market. You need to know what are you trading. You need to know risk management. You need to know, how to make money trade. So that's one. Now, what's my tools? That's where you're gonna say, okay, what's my style? If my style is AI, I need to know about AI stuff. I taught myself Python because it's one of the best, quick solution. But my stuff runs on C# and basically Python and C#. Python I use it for my own build and testing, and another language I use. So, but here is, you gotta decide what you want to do, what you want to be, and then you learn the techniques. So now, if you want to learn AI, you gotta go and learn AI. If let's say you don't like trading with the machine learning based algorithm, like me, I'm not a big fan of trading with a machine based algorithm, like learning, like AI based. But I like automation. I don't want to touch things manually because it takes away the emotion, it takes them away, and I'm good like that. So what you need to learn is that whatever your job is, you need to learn your job first. Now, because I can hire an IT guy and do that, right? I can hire somebody better than me or partner, like my case with a group better than me in AI and do that. So I think the first skill is know your job. If you're a doctor, be a good doctor. If you're a bad doctor and I give you AI-based tool, you're gonna kill more people. So what I'm saying is, yeah, what Firas and Nizar said, but please, please, please know your job first. If you're a teacher, be a teacher first. Then get a robot to help you teach the whole world. So that's my point, and we can talk later about trading more and stuff, because it's one of the toughest jobs you can do.
We'll touch on the robo-advisor later, indeed, but it's good. I mean, if I understand well, then the attitude is very important. The personality as well are to be taken into account among the skills. Other than, and like Nizar said, there is the hard and the soft skills. Both are extremely important. So let's move to the next category now of question, which is the advances in trading and retail banking. We will continue with trading and then we'll move to retail banking. So Mohammed, Firas, and Nizar, if you'd like to jump also on this question, feel free. But I know it's more Firas and Mohammed, I think, this area. Can you please describe for us the advances in algo trading in terms of modeling and application? Like, is there anything that we are supposed to be aware of? Like recently, what are the advances in terms of, for example, deep reinforcement learning, sentiment analysis, neural network, genetic algorithm, for example, stuff like that. And in terms of applications, so are there like advances in terms of strategies testing, alpha factor design, and metrics, stuff like that. So can you please give us a better idea on the recent advances, so we are up to date at least?
Sure, sure. I mean, I'm gonna kind of again talk really strictly about my world. So I actually, work on, I wouldn't call it high frequency trading. I mean, that's a bit of like exaggeration if I call my business that, but I would say, I deal with market data that have like several hundred updates a second. And the problem I face is I'm trying again, so what I was saying kind of earlier, predict a stock return. Okay, the difficulty is that as time goes on, there are extra factors that kind of comes in that makes the prediction, I would say, almost impossible. And this is, I mean, I think what Mohammed was talking kind of earlier. It's where the emotion or like the kind of the views or the style kind of comes in. So in my world, basically, we try to do it before the emotion kind of takes over, and we want to look at the absolute, like just simply the supply kind of offer and demand. So like so we cannot try. Well, we pretend to ignore, I mean, who is behind these orders. Could be another algo, or it could be like a human being, and say let's look at this phenomena. We have buyers and we have sellers, and let's predict what's going to be the next event, conditionally to what we have learned so far. So the problem I face is a bit similar to the question we had on the chat. Is if I go too fancy in the modelization and I use I don't know, like multi-layer kind of networks. I mean. The more I would say it actually kind of this way, the fancier it gets, like the bigger the networks, the bigger, like because when we choose a network, one, we need to choose how many kind of nodes into it. We need to choose how many layers. We need to choose what kind of functions, what's called like activation function. The more like the bigger it gets, or the fancier it gets, the slower. And my issue is I need the result like as soon as possible, means that I have to sacrifice, and I will have to ultimately use simpler models, like the basic of the basic. I mean, like a deep learning or like some so nothing fancy, but that actually balances better the trade-off between precision and time. And because my problem is I need the result immediately. I need the result like now to make a decision now. So in other areas, I mean, and I think, I mean, the rest of the guys on the panel, where actually time is not a constraint, where you don't need to have a decision in a millisecond or microsecond, then you have actually much more choices in terms of kind of model. But that's not really actually my area. My area is try to find the simplest one of them that gives you the the fastest result with as reasonable as possible kind of accuracy. This is kind of the problem I'm kind of dealing with. And I hand it to the rest of the guys, just for their views on this. Yeah.
Okay, thank you, Firas. Mohammed?
I mean, the new, very quick, so for the sake of time, so I see more use of AI, and I hate where people use it as a buzzword, like artificial intelligence. I mean, I asked a question to a couple of people who was running companies, and they couldn't give me a straight answer what they meant by AI. Okay, it's like, okay, we have an AI robot running. Okay, do you know what this is doing? I couldn't get like a straight answer like what Nizar or Firas like been able to put it in words. Okay, so that's something I don't want to scares me, but it's kind of disappointing a little bit where just the people use it as a buzzword and just want to spend some money to have something. We have an AI based something, whatever, right? Okay, so let's put these people on the side. So now let's talk about really good hedge funds like Two Sigma, like Renaissance, Technology, right, Citadel. And those are the people that, even though I have few connection with some of them, I'm trying to kind of figure out what they do to kind of, at least in my small world, do something kind of close to what they do, right? So there is a push to leverage the AI. People discover very, very quick that it's expensive, it takes skills, and it takes time. Also complex, like in trading, I have algos. I build like maybe a couple of hundred trading strategies. My best trading strategies are, I don't want to say the simplest, are just like complex enough. Now, when I started making it too complex, it was curve fitting, it was doing well for 1 year and never done well after, and I back test a lot. So that's one of my skepticism when it comes to AI or something very complex is I cannot test it. So if Firas built something, say, Mo, trade with it. And or for now, I don't trade directly, but the hedge fund use my signals. So I want to be accurate. Eventually, we will have a hedge fund that will use my own algos. We're not there yet. Hopefully one day you guys hear about it. But for now, we are in a build and a phase, right? Let's put it this way. Good thing is we are in a build phase, but I have a couple of hedge funds who's testing the algo, which is very nice for me because you don't have the opportunity to be in a build mode and also real hedge fund like looking at what you built. So I'm very, very happy about that. So one, I see the use of AI, people want to squeeze it, right? And want to see. Now, the dangers there is not proven, okay? So there is a couple of places who are doing really well, but these places are massive, like Citadel of the world, Two Sigma, they are making a good use of it, okay? There is also use of, and Nizar mentioned it, NLP, all right? So basically in trading, you wanna interpret the news and that's where machine learning can help you a lot of looking at the news, interpret them, and basically help you make a decision. So now you don't have to automate. You can get a decision, then you press a button. So you can use AI and add the human aspect into it, and maybe you'll be a lot better off. So the new advances is a big push to kind of implement all this technology, but everybody figured out quickly that it's very, very expensive to do it right.
Okay, thank you. My next question is for Nizar. In retail banking, now we'll turn to retail banking. Can you please describe for us the recent advances in terms of credit risk assessment, automation for corporate finance and FinOps?
Yeah, actually, AI in retail banking has been used over the past decades. Actually, within credit risk assessment, they use logistic regression and linear regression in order to, for example, fine-tune what we call this a factor to say, okay, for credit assessment, is the job more important than the ratio or something, then we will build a score based on that and we'll add to that factor more. But like the usage of data and the algorithm that I use there are really like for predicting a static or a variable. But basically there are 7 or 8 areas where AI is used in different of course flavors in the retail banking. Of course, customer support and service, you have before AI. In traditional banking, you wait for long hours to get someone on the phone to do an operation for you. People paid their bills over the phone, etc. Now with automation and AI-powered chatbots that are either connected to the bank account or actually that help you solve simple questions about where can I find the link or in order to perform my operation on my online banking. Therefore, like instead of waiting on, you use AI powered chatbots and virtual assistants. Second aspect, which is actually still not for this aspect, like that was the first application of AI in banking because the data is there. It's NLP. NLP algorithms were quite advanced since like 2016 or 2015. But personalization, for example, is still lacking in AI flavor, which is the second aspect where AI can be used or maybe started to be used, where banks offer generally one-size-fits-all products. We are not at because managing a product like a credit card or a type of credit card that has return with points or with dollars, etc., you cannot manage it dynamically. You cannot change your products every day and fit it to every customer need, etc. But there are some aspects where you can actually tailor specific strategies for investments, etc., based on the profile of your customer. So therefore, you can use algorithms and AI that analyze the customer data, transactional history, behavior, and then offer a change kind of a variable in the product aspect, and then adapt the product to a certain type of customers if the return on investment is positive, of course. Fraud detection and security, like it's a typical example where before we use rules that are processed by humans in order to make sure that someone cannot defraud or pay with on our behalf something that we didn't buy, etc., like typically. And now with real-time algorithms, fraud detection is made easier with AI, and actually it's working. It's actually some banks have avoided hundreds of millions of dollars in terms of fraud, but it required a substantial investment. They invested hundreds of millions of dollars in order to have the infrastructure to run fraud detection algorithms real time over their credit cards or to detect money laundering activities, etc., and avoid fines. Credit scoring, credit assessment before AI, we use primarily factors like credit scores from Equifax, TransUnion, etc., and some ratios and expert-based judgment. Now, algorithms can actually decide if we can give a loan to someone who is actually not in any of the categories where we had like a scorecard with the specific, like it's not linear. It's actually, you have a yes or no, but in between, you needed a human expert that goes and analyzes this for hours. You can do this with AI now. And actually it's working, and we have implemented some algorithms and strategies, business strategies with AI. Document processing and automation, same thing. You have loan origination. You need to approve that the client gave you their employment letter, their bank statements, their actually tax return, etc. All that is actually paper, and it needs to be analyzed by a human. So banks do kind of either for specific types of categories, they have to analyze all that data, and it needs to go through 2 layers of security, where you have people making sure that those documents are correct and contain the correct information and numbers. But now it's possible to automate that with AI, and actually not 100% automated, but extract all that information, make an algorithm that actually detects anomalies within those documents, and then give a score where you have a high risk, and those high risk alerts get analyzed by operation specialists for credits and loans management, and lots of other like predictive analytics and process automation, as I said, like RPI, where you have lots of interfaces, and an operation specialist, meaning that is approving a trade or approving an investment based on a specific regulations of a company, of a country. Then they have to check the KYC. KYC meaning you know your customer, meaning that the risk profile of this customer that is investing and buying products for their retirement, are they aggressive or not? Is their risk profile, did it change or not? That requires an expert judgment, and it needs to be manually approved by an expert who is certified. That's actually a Canadian regulation. So how can we do, if you have tons of investments made every day and tons of interviews made every day and hundreds of and all those notes taken manually, and then you have to analyze the content of the interview that was between the customer and the loan or the investment advisor, and then make sure that the transaction that was or the investment that was made or the trade that was made is actually conform to what the customer needed, and then of course match that with the risk profile of the customer. All of that requires navigating through 4 or 5 systems and clicking on multiple interfaces, and then taking the decision. With robot process automation, you can actually grab all that information and then bring it in one area or one space, and of course automate or do some rule-based checking, and then of course bring the information that is relevant to the expert that needs to approve. So those are examples that actually real life examples. I don't want to give more details because I don't think I'm allowed by my employer, but the fact is that those in retail banking are lots of areas of advancement and actually where AI works.
Thank you. Thank you to all our 3 guests. I don't see any question on the chat so far. I'm not sure. I'm checking also if there is any virtual hand with a question. If not, I will jump to the next big topic, which is the role of robo AI advisor and digital personalization compared to humans. And we'll stay with Nizar first, and then we'll go back to algo trading and investment. And Nizar, can you please explain to us in more details, and you touched on the personalization and importance of personalization. We know that customer engagement is so important, and I know that because I'm a marketing person, so it's extremely important, and that's what everybody's trying to do, because it's all about the CX, what we call in marketing CX and UX, customer experience and user experience. So we want to know, what are the tools that you are using to improve into the personalization with the customer in specifically the retail banking? What are, for example, also the tool that you use to track and monitor the effectiveness of the personalization that you're doing? And I know it's not easy to be among the pioneers in banking. So how do you try to be really among the top innovative, for example, banking? And what are the challenge? If you can also give us the challenge.
Okay, I'm going to answer this as someone who has been seeing this happen, because my team does not handle that part, but there is a specific team working on it daily at the bank, and I know their challenges because we were working with them, or I was working with them providing the platform. They bring their data in and work in. So the new systems or new techniques, Salesforce are offering also off-the-shelf tools in order to manage customer experience or user experience and do personalization. CRM is like the backend thing part, but there are systems like, for example, Pega systems. They offer a framework where you can bring your data, your marketing, like your client interaction data, etc. But you can import from Adobe Analytics if you're using Adobe Analytics in your website to track customer behavior, etc., and collect data. So basically, there are possibilities where you can have models, which is called like doing reinforcement learning using Pega systems. For example, they offer this framework where you can actually personalize what to bring as information to the customer, what to recommend, when to recommend it, and on which channel the customer is more likely to be responsive. So, for example, launching marketing campaign, and if you're actually just using email, you're like blindly bombarding your customers with information, and then you're training them to ignore your signals. So therefore, you're actually losing them, and you're not reaching more and more. And that's the challenge, actually, what to bring, or if we have a campaign, how to arbitrate between the campaigns and make sure that this campaign does not interfere with another, and we're not sending 3 emails to the same customer in one day, advising them about multiple things or maybe contradictory things. So therefore, there are systems and tools that allow to arbitrate and to personalize the interaction and what we call this, customer, like the recommendations. But I mean, I went into a specific type of application, but generally about personalization, it takes everything. It takes all your customer data. It takes 360 view of not only the behavior of the customer on across your platforms, but also about their financial situation. What do they need as a product? And you need to have not just one type of algorithms or it's like you're tackling multiple layers, and each layer needs specific techniques in order to predict what the customer needs. What is the actually, what can I recommend as a product to the customer? And then you go to another layer. Based on the customer behavior, how can I interact for this? And then how can I arbitrate between what I would like to recommend and send to the customer, etc. And then it goes up. But generally, we're not at this level yet of, it's all like done, siloed, parallel, but it's not all connected yet. And to connect all that, you need really, really the backend, meaning cloud, proficiency of algorithm, real-time data, big data, and also like that all your systems are connected, and you have all the making sure that everything is connected to the customer, not per product or not per session, etc. So
yeah, I see. Unified, what we call a unified way of handling the customer.
To the customer.
Correct. Yeah. Thank you. So we'll move again to the trading and investment. And here we'll talk about how do you perceive, Firas and Mohammed here, how do you perceive the role of robo and AI advisors, and what is your confidence level, and what do you think is the market confidence level? The reason why I'm asking this question, because we know, for example, the US Securities and Exchange Commission give the same legal status for robo-advisor as much as a human advisor. So, and there are plenty of financial institutions, they are so successful using robo-advisor. They manage like billions of US dollars in asset. There are, for example, AI hedge funds, and I prefer not to mention names so that they don't tell me I'm marketing specific company, but we know that there are a lot of innovation happening. And there are some financial institutions that goes more with hybrid advisor. They are in between. They still want the human touch. So my question again, how do you perceive these robo AI advisor? From your point of view and from a market point of view, so also what is the confidence level? Thank you.
So yeah, if I want to start, so I mean personally, but just to kind of show my colors, I'm skeptical and a bit bearish kind of robots. The reason is, I'm still find myself actually, I would say maybe old school, where as I mentioned earlier, I said one of the skills I like is physics, right? Means that if we make an investment decision, I like that investment decision to have a meaning. Means we are capturing a phenomena in the market. We understand that this price level is, it's over like this company is overbought, oversold because the fundamentals are saying this and this and that. And I would like to understand why, we're making a decision. And usually to understand why we're making a decision, that comes back to like a linear model, or like saying it's because factor ABC is saying you buy, and factor, I don't know, XYZ is telling you sell, but the weight of the first one is kind of higher, we end up kind of buying. But I still have an intuitive answer on why we made a decision. Now, if you put a robo in the equation, now what is the robo doing is, it's going to use data that you may or may not control, that might contain some like patterns that a human being cannot find. However, it might also like contain some patterns that the AI is going to find kind of randomly, like they have no meaning, they just happen. Like that data set contains some sort of pattern, and the algorithm that the AI is using found it, and then we make an investment decision based on some randomly found like pattern or alpha and so on. And I personally wouldn't bet my money there. So I still like to have I mean, maybe not on the investment per se, but having an assistant, like a tool that helps you like summarize data or visualize it, or make you recommendation. But I still think that there should be like a human being somewhere to intercept and to do to validate whether that decision makes sense or not. So this is, I mean, in the kind of robo in general. I mean, but then I was saying earlier, oh, I use AI in my business. How come I'm kind of contradicting myself? Reality is, when I use it in my own business, we still want to make the AI actually operating within what I would call a deterministic barrier. So the AI cannot take more risk than specific level, cannot go beyond a certain kind of I would say in the decision making. I will give AI, for example, 10% freedom, but I will just say that if within that 10 to 10% there is a mistake, it's no big deal. Or I mean, it is a big deal, but it's not as big as giving it freedom of say 50% of the decision making is powered by like an AI. So I like the hybrid approach. I like to have, still back to basics, means your phenomena is driven by physics, not by math. Math is a tool to, to find the solution. You can use math to, to model the problem and to solve it, but the problem itself shouldn't come from math, shouldn't come from data. It shouldn't come from like a neural network. It comes from like a phenomena in the market, some expertise, some know-how, some domain knowledge, whatever it is. But that's should be the starting point. Now, of course, we can say, okay, I can train a robot because I'm using data prepared by specialists and so on. I'm still nervous on the outcome of that that training might be really random, and you might find patterns that make no sense intuitively, and we use them, and then if something goes wrong, you have no way to understand why the decision was wrong. And that's, for me, is it's a big like kind of issue. So I'm quite skeptical slash kind of bearish. But yeah, I mean, there are funds, there is money invested there. I'm not the chief investment officer of these places, but I mean, just for your information, some of this is also buzz as well. Some of that money is, I believe, is really marketing, just to show that there is, interest of these companies to follow the trends and so on. So there is like a not serious aspect as well into it. So just whoever is interested there and would like to try it and so on, just be careful, because you lose intuition, and once you lose intuition, it's really, you're left on your own. You don't understand why you're losing money, or I mean, you're happy to make money, but you don't understand why it is losing, and that's like a big deal, especially in trading. Maybe Mohammed is gonna add more on this, I suppose.
Yeah, we'll hear from Mohammed point of view. Go ahead.
Sure. I definitely have strong opinions about the topic. So the way I build my own algo is I took the way I trade and I said, let me automate or try to automate every aspect of how I make a decision. I would say I was able to kind of automate the fundamentals. I'm still working on anything that it's quant based and technical analysis. I was able to do it. Now I start testing an AI based filter, and my worst filter is the AI based. One is when it does bad things, I cannot. It's like I'm like, okay, whatever, he did this because maybe this or whatever. I cannot explain. My client don't like it. He said, Mo, don't add the filter that it's AI based, because we had a bad experience with an AI based company, and this is last year conversation, and he's like, oh, we don't want to, like, we lose our money, and we don't know why. We don't know why. So there is skepticism in there. However, having said that, there is good big companies using AI-driven models successfully. Okay, so that's what I'm talking about, and we'll talk about pros and cons, I guess, next in the slides I saw, because of the cost and because of how hard it is to test and to build it and to do it right. Yes, AI could make money, and then the decision will be easy and in a sense where, because when you hire a person to trade, you don't know what he's doing. I bet you 90% of the time he doesn't know what he's doing. Like, I talk to traders all the time. One day he's bearish, tomorrow he sleeps and he wakes up and now he's bullish. I'm like, what happened? Okay, so there is a lot of bad traders and bad investor, like investment managers. So having I rather a machine that I test and after, let's say, 2 years, this machine is or black box making money for 2 years, let's say, theoretically, then we put the real money on it and makes like with a small risk and makes money for another year or two. Then I don't need to know what they do. I really don't. Then my point here is because this wave of AI is new, it's not well tested, and it's not proven that it's working like a lot. Only few places can prove that their AI system is working. So my point here is, if somebody comes to you with a track record and say, look, how much we're making money, and if you think the environment is not going to change and you can implement his ideas, that could be an AI driven, why not? I don't need to know why he's buying and selling. They're making money most of the time. So that's where I contradict with a little bit with Firas. It's like when people will hire a trader, they will say, okay, or a money manager, is like, what's your track record? Okay, so same thing. So if you have a machine or an algorithm that makes money, say, what's your track record? This is why we're going to get there very fast. Alpha, I believe AlphaGo and Deep Blue. AlphaGo and Deep Blue. So one beat the chess masters and the other one beat people in the Go game, which is more, I think, may have more iteration than the chess itself. So if we could build something that, be able to kind of beat the best mind in this game, I think my algo is better than most traders. I can confidently say that. I have numbers to show, it's online. It is. Why? Because it adds the discipline to my own experience. So the point here, yes, I'm skeptical in general because there is a lot of bad traders and bad money managers. It's not because it's like garbage in, garbage out. So if you give this bad trader AI kind of tools, he's going to configure a bad AI algo because he's a bad manager and a bad trader, you know? So if you give that to somebody who's really good at what he's doing and he tested and he's proven it works, to me, it's another model. So I have like 200 strategy. So my next strategy I'm working on is AI-based. It's just 201. If it proves that it's good, and I can wait, I'm not in a rush. So I have like a couple of years to test. If it proves me that it works, I will put money. I will tell the people I put money on it. So that's the mindset. It's just the problem is people. It's not the technology. And the technology will not run away from it. We have to face the fact that most of the trading now is run automatically. That's like a given. And a good portion of it AI-driven, meaning there is some machine learning in it, there is some NLP in it, there is some, different ways of machine interview. So I'm not, it's a fact. I don't want to be skeptical or not skeptical. They don't care if I'm skeptical, right? I know, for me, I promise myself I never trade manually. Everything has to be automatic because it takes out but my trades, all the algo is based on my own logic. So to Firas' point, it makes sense. So when my algo actually is gonna trade, if I'm looking at what's happening, I'm gonna know that it's gonna trade in the next half an hour or so. So that gives me a lot of comfort. And then all risk management, it's basically automatically there, or the kill switch, everything is there. So I sleep at night. Yeah, so I hope I'm clear. Nobody cares if I'm skeptical or not. The thing is, I want to be able to adjust, and I use this technology. If it proves me that makes money, I will use it myself, and I will eventually sell it to my client.
Okay, thank you. A follow-up question from Semi Ayari. Based on historical data, algorithm might struggle to adapt to unexpected market events. Is it a risk of a robo-advisor? Who wants to take this?
I'll take
Go ahead, Firas.
Sorry.
Go ahead. I have something to say about it, but go ahead, Firas. Sorry.
Yeah. So the thing is that algorithm, at least again in my world, right? We expect the market not to behave as per the backtest, and we expect it to behave, not by, say any historical calibration you have done. That's expected actually. So the answer to this question is, in the code we do in the algorithms, there is some code is there, for the unexpected. So when we design an algorithm, you want to make sure that, your algorithm, unfortunately, an algorithm is kind of coded. So you code the program, you put it in production, and you use it every day, whatever, and then something kind of happens. So when that event happens, the code is already in place. So the algorithm itself cannot change. However, if the algorithm logic is based on, I would say inputs that are market dependent or stock dependent. So for example, you say, I will observe not only the historical values, but I will observe the current most recent values in my prediction, then you have a much better chance to cope with the unexpected. If today's volume is, say, for example, double of the volume of yesterday, which is something you don't know, but you start seeing that, for example, usually within 1 hour, the market trades $100 million, today it's 200, then, the algorithm needs to understand that you are deviating from the historical. Then the algorithm have logic into it that says, you know what, today the market is double volume, then I will, I'll be more risk averse, or actually the other way around. I'll be taking actually kind of more risk. I'll be waiting more time, or I'll be waiting kind of shorter time. So you can actually, by code, incorporate some of these unexpected events. However, there is a limit to that. And there are actually kind of cases where, unfortunately, you know, when you are facing a 6 Sigma or 7 Sigma's event, then, you know, the people who are monitoring these algos, like sales or traders or whoever that is, because you don't want algos to be blindly running. You always want someone watching them. That person can intervene, and we provide these type of tools so that people can either kill switch. So the kill switch is basically you pull out all of your orders from the market. You can also take kind of manual control, so we can kind of mitigate it. Now, back to a point, is it risk for robo-advisor? But yes, it is, because if the robo-advisor is not supervised, if there's no one watching it, it's catastrophic, because it just might do a random thing, because this market event is not in the training set. So now you are just almost like kind of flipping a coin, which is back to why I'm I don't like necessarily the robo-advisor because of this type of risk. Yeah. Thank you.
Okay, thank you, Firas. Mohammed?
Okay, so here my practical take on this. So again, you put it in the hand of bad trader, bad risk managers, bad investors. That's what you're gonna get. The problem this algo trading is facing is not different than what a human being is facing. So actually, it's gonna help prevent more of these issues if your rules and kill switch that Firas is talking about are implemented correctly. I mean, this is what are we facing. So you put your machine running, buying and selling stock, whatever, or I don't like trading stocks, index or whatever it is, like a commodity, gold. So what are you facing when you trade? Liquidity. That's one thing. So you want to trade, you want to typically run your algo on liquid, especially high frequency ones on liquid market. But in your head, you need to know that liquidity changes throughout the day, even for the most liquid things. Now, when the market moves fast, most of the people who trade get emotional, and that's where the big losses happen. Instead of selling, they buy in more. Instead of getting out of position, they don't. The other thing, beside like a mistake, like honest mistakes, people get like greedy and make mistakes. So having a robot actually could prevent this. Okay, that's one. Now, if your kill switch or liquidity dries out for a system, if you're smart enough, your position sizing won't be really big. That's one. And two, you have to monitor it a little bit. So, you got to call, let's say, another broker and close your position or whatever you do. The problem happens when you deal with big position. So there is the flash crash of 2010 that basically shows that algo trading can decide, the machine can get together and push the market one way or another. And because also it was kind of, I don't know, they still trying to figure out, it was like, if everybody configure their algo the right way, this be okay, but the market is driven by buyers and sellers. So they pushed the price down, and then after 20 minutes or half an hour, it came back. So yes, there is a risk when there is a big event, because if the machine on is going to keep selling or buying, if it's trend following system, it's going to keep like following the trend, and it's going to put pressure on the market to go even deeper, lower or higher. It has to have some oversight. So you cannot just let the algo run and you're not aware that your algo is running 100%. You got to keep an eye on it. But I feel like if I have to choose with the word with automation and algo, I'd rather sit in a plane and take me from one place to another than try to come to Tunisia walk. So that's where it is. But if you don't know what you're doing, you're gonna get lost. You're gonna find yourself in Korea. That's the whole thing. You gotta know what you're doing more than anything. If you know what you're doing, the risk of the algo will be like minimized. But the problem in this world is a lot of people are not know what they're doing. They have a lot of money. They don't take the time to test and build the stuff and be subject matter expert in what they do. And that's what causing these problems. They go live with the product that is not ready. And that's what caused problem. And that's, I think, why Firas is skeptical. I think I'm more skeptical from human being than a good algo. If you have a good algo, I will go to the moon. And if I was if I had that career, I have no problem going to Mars, be the first guy. But this is the thing. If you're in the hand of a good doctor, you should be fine. It's not a lot of good doctor in our field. And that's a reality. And that's what worries me, honestly.
Okay, good. Thank you for your insights and opinion. Let's move. I don't see more question in the chat. So I'm moving to the last category of question, pros and cons of emerging techs in finance. And we'll focus more here on the cons and the risk and the limitation, because we talked, I think, enough about the good and the advantage and what we can do about all these kind of emerging techs. So let's start with Nizar. We didn't hear Nizar for a while, so let's come back to Nizar first. If you can give us an insight about what is happening in retail banking, what are the limitations and risk? For example, when we use generative AI, when we use credit scoring and worthiness, what kind of risk in terms of reputational risk or operational risk, etc. So basically about all this kind of emerging tech in general. Thank you.
Actually, this emerging tech, you encounter way too many risks. For client-facing technologies, you have reputational risk. Reputational risk can affect your income, and generally, like there are like charts about assessing how much money you could lose from a reputational risk incident, for example, and therefore that actually puts the technology you want to put in place either in the green, yellow, or red, or orange or red zone. So in terms of risks, and financial institutions have really good frameworks of analyzing risks, and they have good taxonomy of risks. Then every time you're bringing in new tech, you have to go through this risk analysis, from operational risk to as I said, to the other framework of risk, which is run by the risk department, which is independent. That's why that's an independent entity, because therefore you cannot just like they safeguard the financial institutions from making any mistakes from tech. And then afterwards, if you have a huge risk, someone needs to sign off if they want to go still and implement the technology despite that risk. So as I said, like, first of all, can be like on the top of my mind, security concerns, meaning that you have new security challenges using the new technologies, because you're exposing yourself to the risk of being attacked or for your data to be leaked out if you're putting it in the cloud, etc. So that's a concern. And cons, regulatory challenge, because every time there is new tech, the regulators wait, and then afterwards, even sometimes your income is depending on it, and you're too much coupled with a certain technology, and then there is a regulator that says, okay, now you cannot use this, or you have to put this and this and this in place, and then that generates costs and becomes costly for you to maintain the usage of that tech. You can actually impact the market about job displacement. Are you what we call operational risk, meaning that if you're gonna rely in a technology and saying you're automating 90% of your loan origination system using AI, and therefore you're actually liberating lots of credit managers, people who are subject matter experts in credit decisioning. If your system is down, if your algorithms do not work anymore, if there is a big problem in the algorithms and you're not able to process automatically all that kind of data, it's either you close shop or you reduce and you're not taking in any loan applications, or you have to scale up. So therefore you have to manage that risk, meaning that you need to have mitigations for that operational aspect. So, and also the bias and fairness, which actually can entail the reputational risk, and you can be subject to class actions, because you make sure that everything is working, like you're trusting a team of 2-3 subject matter experts, consultants, or whatever, you're bringing them in. They build you a very good credit approval algorithm that will actually discriminate all middle-aged women, or based on race, etc. And then afterwards, you're really subject to a huge reputational risk, and therefore like loss of also like fines, regulatory problems, and also loss of when you lose your reputation, it's very difficult to get back in shape after that. So these are lots of cons and risk, and of course there are frameworks to help you go through that without any problem, or or knowing where you're going, basically putting a plan into action and having a mitigation plan, etc. That can help. But yes, this is a set of, like, as I said, on top of my head, but there is more.
Okay, thank you, Nizar. So let's move to Firas and Mohammed again, and the same question, but from a point of view of trading and investment, like what kind of risk?
Sure. I mean, I think probably I share with Nizar all of his kind of concern. Probably the key word here is, but I mean, again, from my perspective, is predictability. Is because you're losing predictability in the outcome. So the output of the AI, or or the LLM, or whatever, or the NLP, whatever it is, because that outcome is not predictable, you might have I wouldn't say illogical, because the algorithm has a logic. I would say they are not like they are not like meeting common sense. They might create problems. Yeah, as Nizar was saying, the gender bias, or like Middle Easterns are the one get picked up by like facial recognition, or whatever reason, right? Which the AI itself is not the responsible. It's more about the data. And then how can you manage these kind of risks? Because you're using a technique that you might not understand very well, because maybe you're using it without the frameworks in place, which what I was kind of mentioning earlier. I'll use it, but I would put a deterministic barrier, or I'll put like a framework kind of around it, so that I can enjoy the benefit of it, but then reducing the risk kind of around it. The other thing I probably would like to mention is, it's nice, I mean, and kind of back to what Mohammed was saying earlier, it's nice to use AI for, I would say, low value added tasks, for a task that's very, very clear, that's very, where there couldn't be any mistake, or there couldn't be any like outrageous result. Then I'll be very happy to use an AI there. But if it's a task that has a value added into it, I would like to have a human in the chain of it, because you would like to use the the subject matter expertise, or domain knowledge, or whatever we want to call it, just to intercept if something kind of goes wrong, and then use that AI as a helper, and then free the subject matter expert to do value added tasks, and eliminate, or try to eliminate the low value the low value tasks. And that's, for me, where we will have the pros of the AI, and have like a less cons of it, where the problems are well defined, where you're using it for areas where the risk is quite kind of limited. But then, yeah, I mean, take an AI and put it as like all of your money on it, and put someone who has no idea what he's doing, and just downloading the latest package in Python. That's probably you're really in the heart of the cons there. But again, please don't get me wrong. I am an AI user. I'm an AI kind of consumer. I like the latest of technology, and I'd like everyone to take a look and understand it. It's like anything else in life. I mean, it's you need to know what you're doing actually, and whether it's AI or linear or whatever it is. If you are using it blindly without that domain knowledge and so on, it's the outcome will not be what you expected. Yeah. Thank you.
Thank you, Mohammed. Any thought about risk and limitation, if you want to add something?
Sure. So I give you 3 pros and 3 cons, and also three different acronyms or names for AI on where we're going to go. I think so. As far as pros, so definitely enhance predictions as far as algo trading, and so I'm going to talk about algo trading. But really, when I think about my field, I think I'm generalize the whole thing like for everybody else. So it's going to enhance predictions, efficiency and speed. That's for sure. Okay, but and one of the area that it's improving a lot, it's already proven, and both Firas and Nizar touch on, it's risk management, and I use it loosely. I mean, credit risk, market risk, you know, even ESG, like environmental, social, and governance. So AI is doing already a good job. Okay, it's proven. All right. Okay, so that's that. I'm going to stop there. There is a few more, but I'll stop there. As far as cons, there is regulatory concern. There is ethical concerns, meaning fairness, especially 2 points here, fairness and, I want to say, data privacy. Okay, even in trading, right? You know, it's like you were talking about robo-advisors and stuff. So there's data. For example, I don't know. I don't know. I don't want people to know what I have and, you know, what I'm doing, especially in trading. Like, you know, you don't want people to know what you do. Okay, and fairness. So fairness, if fairness, I mean, I can even in trading equate to where it's not fair, like because you have more money and more thing, you build a better algo and you trade take most of the liquidity in the market, and then we cannot trade with you. And actually, a lot of people who complain about fairness, they're not. These are the market makers who don't use automation, and they're scared of losing their jobs. But they're using fairness as a tool to kind of complain. That's what I think. But there is ethical concerns for sure. Okay, so now the real problem also, the third one I see is two main issues. It's the cost and complexity, and they go hand in hand, right? And that's why you want people to manage this. Like one, they need to have subject matter expertise, and they need to be like business savvy, right? Unfortunately, a lot of, especially in big places, banks and large hedge fund, it's not their money. So they go and they, you know, oh, let's open an AI division. And okay. Then they open a division. Oh, we need like 20 big servers. Oh, okay, $100 million. Then the boss comes and say, what did you do with the $100 million? Oh, we built this trading algo. It doesn't make money. We don't know. Okay, let's implement it because we just spent the $100 million. This tough conversation I had actually with some of the people, we pushed some product, not algo trading, but some product because the company invested so much money and they had to go live. Okay, so the complexity and cost, that's one of the cons, or I think the major cons. For me as a small company, that's one of my biggest hurdles. Is especially I don't want to like have a partner, or I don't want people to kind of help me with money. One of the biggest puzzle that I have to solve is how I can navigate this, do something very cutting edge without spending a lot of money, but also make sense, because you don't want to test for 2-3 years and then you throw it out. Yeah, it could happen, but then you want to make good decisions quickly. So what I'm trying to do is simplify the problem and test to see if this really adds value. And if it does, will add complexity. And one day, maybe we get a partner or ask for more money to kind of help us push this to the second level. So I think one of my biggest concern or cons in this new technology is the complexity and costs. Beside the human, like the lack of expertise and the lack of like good knowledge around. That's a given, okay? So now let me give you 3 buzzwords or 3 words I usually use when I talk about AI. AI for augmented intelligence, meaning you want to have the AI with the human person. So now we have an augmented intelligence. That's what I believe in. I trade better, my algo is better, I build it, now I don't touch it. he does. I'm not emotional. At night, I look at it, it does this. So now I'm able to sleep. That's augmented intelligence. And that's where we're going. If you have AI and you have good human next to it, that's explosive. The next word is what I call artificial stupidity, IS. There is a lot of that. I don't think I need to expand on that. There is a lot of bad code. There is a lot of bad implementation. And that's what I call artificial stupidity, right? People who implemented that should go to jail. All right. The third one, and I'll leave you with this, is, and it's this one I did not come up with, is XAI. XAI is explainable AI. So to Firas, what he was saying is, okay, he's skeptical because he cannot explain it. Guess what's going to happen next? And probably Firas will lead this. Let's build the stuff that explainable. And that's what this thing is going to, explainable AI. So you do stuff AI driven, but at least we have some comfort. But also even that comfort is coming from AI itself, because I equate, like me, I'm a big user of ChatGPT, like since day one, right? I wanna do anything. I wanna send a letter. You know, I go there. I say, look, write me a letter about this. I wanna write a code. Say, here my code ideas. Write me code about this. So I'm a big believer, big supporter of AI. However, with great power, you have to have great responsibilities, right? So that's what I think explainable AI will be the next step of all this. It's like, it's not just a black box. It's something that we can understand and make sense to us and we can talk to. Yeah, it's like having very smart assistant. I'd rather have a very smart assistant and they are robot than having a bunch of idiots. And I'm sorry for saying that. Bunch of people not motivated to work. Let's put it this way. Bunch of people are not motivated to work. I'd rather have a robot that is smart and I can talk to and communicate with.
Okay. Thank you for sharing your perspective. I will close from my side with this question, but again, we are still opening any question from the audience, so please feel free to put your question on the chat, or I will give you also the opportunity to ask directly if you want to talk directly to our guests. For the last, maybe we'll add, because we are beyond the time already, maybe 10 last minutes in case the audience wants to ask question. My last question from my side is, do you think AI-powered stock exchange may or will end in disaster? What do you think? So we read it in the news sometimes, so I want your perspective on that. What do you think?
Okay, I'll take actually kind of this one. Well, let's put it actually this way. So I work in stock market, so I really want to comment on stock market and listed products. So I will not talk about OTC or some of the products that maybe have other dynamics. So what's going on now is, I would say, markets are still occupied by retail investors. So there is, people who, will use an application, will use online, they will trade on the fly, on a whim. So we have flow like that. This percentage is, varying from one region to another, but it's actually like still a driving factor to several markets in the world. Then, we have what people call like HFT. It's probably like a melting pot of many things that where I would say algorithms are taking decisions. So the high frequency trading comes from, you are revising your decisions at a high frequency level, means you are consuming market data or other kind of data sources, or you are evaluating your decisions very, very, very fast and many times per second. So this high frequency activity is real. We can say it's powered by AI. For some, yes. For some, still, just going back to the basic fundamentals of trading. So this high frequency trading activities, I mean, I would call it, kind of market makers. So we can argue what's makers and so on, but this is actually supporting price level, where we think that the real value of the company is this level, and the market maker will take some spread around that. So now when there is a problem, or when there is like a crash and so on, these market makers pull out of the market, so liquidity disappears, okay, because of some risk management kind of threshold are activated, because someone stops the strategy. So all of a sudden this liquidity is kind of disappearing. Then you will find kind of chaos happening, because people who now will start trading, there is no one else on the other side, and then the prices are kind of moving. Now, what's the meaning of what I'm saying now? Is it AI is responsible? Is it the retail investors? Is it the the actual investors who are trading in panic mode? Is it the market makers who are pulling out because the market is is changing kind of regime? The answer is it's a bit unfair to say it's an AI problem. It's at the end of the day, there's someone behind it. So there's a risk manager. So there's this, as a risk manager, there is a trader who is in charge of the risk. Managing the risk of that tool. It's, from my perspective, it's really up to these people actually to manage, and it's ultimately it's their responsibility. I wouldn't say it's an AI problem. I'll say it just comes back to risk management. And if that risk management framework or practices and systems and whatever is in place, I have no problem with AIs. Because it's at the end of the day, it's a tool, right? So I just would like to shift the question. Is it's not an AI problem? It's back to risk management. Yeah. Thank you.
Okay, thank you, Firas. Nizar, Mohammed, do you want to add one last comment? Voila. Maybe Mohammed. I know Nizar is more in retail banking.
Nizar, go ahead. Nizar, you know that I have a view, so go ahead.
I mean, in terms of like my view would be in terms of I don't know. I said like about the risks and pros and cons, but it's not easy to say that AI is going to take over and everything is going to be automated, etc. Being in this field and knowing what is going on, it's really tough to make it work, and it's really tough also to even make leadership and execs understand what it does entail to use this, and how can they be more pragmatic on using it. So the field is still kind of, even though it's been 5 or 6 years now that everybody's talking about AI and how it's going to revolutionize the financial industry. Even when ChatGPT came out, people were panicking that it's going to actually make the financial industry disappear, because everyone will be using ChatGPT to place their bets and do their investments, etc. So wealth management, financial advice, all of that is going to be gone down the drain, because ChatGPT is going to replace everyone. But actually, it's not the case. It's not something that's going to be tomorrow changing everything. So it's best for any organization to make sure that they use it to their advantage, they staff accordingly, make sure that they don't look for buzzwords, but they actually start from their business needs and they challenge their own products. And then they see if AI is applicable for it or not, or actually, because in most of the cases, a good data strategy and a good data-driven approach is better than lots of machine learning and dabbling with technology that nobody masters really in a certain organization. That's what I have to say. Thank you.
Thank you. Thank you. We'll finish with Mohammed, your perspective.
Yeah, so I'm going to ask everybody, right? How old is trading? And how old the stock exchange? And you guys do know how many times the stock exchange, let's say, closed down because of a disaster or something? Like, stock exchange doesn't close down, right? And trading is since the Stone Age we trade. So the short answer is no, right? And we're gonna have like issues like flash crashes and stuff like that. But if you look at just the stock exchange itself with a listed product and not, and I will add OTC because even OTC is traded automatically. So trading, the game is too big to fail. It's as simple as that. Like innovation, we're always going to have new things and people going to overreact. And that's why I trade, because people overreact. And that's why, my algo is successful in times, because capitalize on people overreaction. So this is exactly it. So when the cryptocurrency came, everybody said, oh, no, it's not going to stay. Crypto is here. It's not going anywhere. We're going to have legislation around it, and we are trading it. And it's going to keep changing. So now AI-driven stuff and algo is going to make things faster. It's going to make things more entertaining. I give you stories that people don't know, and you guys be surprised how professionals or use it. For example, that it's especially high frequency, which I don't like. So the high frequency models and they will compete against each other, like these algos. So for me, let's say my algo has to buy now, Firas algo has to buy now too. But Firas algo is analyzing the trades, the prices, and the volume and things in the market and other things in the market. What I do, I put noise. My algo will put noise in the market to slow down Firas algo. And then I trade before him. So you understand what I mean? So it's all about nanosecond, like not millisecond. So basically the idea here is we have more tools now to kind of be more creative in what we do. And my wish and hope is like people use it the right way, right? Because things like this, like, and you can argue, is this the right technique to do? Is this like the right things to do? Like put the noise in the market and stuff like that. People do it. So basically to kind of make you, even human, because what? From where it's coming? From human being conversation and stuff. So if we are auditing or investigating something, you talk to somebody, he's going to give you more noise than things to waste your time. So the algos now they created some algos in Wall Street that put noise. So other algos slow down so they can trade faster. The point here is, yes, so to answer your question, this is not going to end in disaster. People is going to lose their money. Some people is going to make a lot of money, and the world's going to keep turning. So the thing is, we better adjust, because as Darwin said, it's like, we got to adapt to things to kind of survive, but also make our life more interesting. I don't like, just saying, oh, I'm not that guy who look back, like now is better than before, or now is better than tomorrow. No, every area, we're going to have new things and we got to adjust. So this is like electricity. I was asking my dad about when the TV came out, because he's in telecommunication and he's an engineer and he works for, the Tunisian TV all his life, right? So I asked him, I said, Dad, tell me when the TV first came, like, how people reaction is. Because I was telling him, this is the same reaction I see people doing with AI. It's like they think it's a hoax. No, this is like a tool to help us live better. So I may as well but you cannot do it if you don't work hard, because it's complex. So that's why I'm saying, but you can use it to learn. I'll give you an example. I did Series 3 exam. I did not buy a book. I opened ChatGPT. I told them, give me 1,000 multiple questions. So let me give you some nugget there. 30% of the answer were wrong, because I know it's my field, right? So 30 to maybe more than 25%. So I think 30% of the question weren't perfect, weren't nice. So yes, it needs a human kind of touch. But because it's trained on data on the internet, so not all the data on the internet is good. So imagine you trade an algo based on data, that news, that book. How do you know it's good? this comes back to what I'm saying about having the right technical skills, because then if you use it like without thinking, you're gonna make mistakes. So that's why we have to kind of like push ourselves to learn more about our fields first and about the technology, and you know, live with it and learn to live with it. And if you don't like it, you don't use it a lot, use it a little bit, but you gotta master it, and because it could hurt you faster.
Okay, thank you. Thank you, everybody. I don't know if we have any last question. I don't see anything on the chat, so I think we will be closing, Sammy, at this point, right? And we went a little bit beyond the time. So I would like to thank everybody who joined us first, the audience. Thank you for joining us in this nice round table. I would like to thank every TICE member who helped and participated in organizing this event. It was really an ongoing preparation until we reached this event. And of course, I finish with a special thank to every one of our guests who joined us today, Nizar, Firas, and Hamad. Thank you for taking the time. Thank you for sharing your insight and knowledge. It was a great, great pleasure to have you all three with us today. Thank you.
Thank you.
Okay, thank you.
Thank you, thank you, thank you, everyone.
Thank you.
Bye.
Bye-bye.
Bye.
Bye.
Bye-bye.